morning. In fact, we've built on slightly higher from that as well, given that the numbers we've received, even from the broader end of the market, have not been all that bad in the last few hours, if you could say. Let's take a look at what the markets are doing right now. And for the Nifty, we're at 24,641, very close to 24,650. Let's see in the next 60 minutes if we're able to surpass and then hold above that 650 mark. So you have a 0.6% uptick coming in on the Nifty 50. For Sensex, it's a 0.5% uptick coming in. Similar moves. India VIX is lower by about 1%, so looking good on that front as well. Nifty Bank is up 0.3%. Let's see what the broader end of the market is up to in today's trading session. The Nifty mid cap is outperforming the benchmarks right now, a 0.7% uptick, and similar moves from the small cap space as well. So in fact, the show of support today for the overall market is coming in from the broader end. If you take a look at some stock specific action, it's largely names like Apollo Hospital now up 7%, so consistent performer today, followed by Hindalco up 5%, Hero Moto, Dr. Reddy, Cipla, Eternal, BEL, all of these are up 2% each in today's trade. On the flip side, handful of stocks that are causing some pressure on the Nifty: IndusInd Bank, Adani Ports, ITC, Titan. These are some of the stocks worth watching out for. Like we were flagging off some time ago, you have only FMCG and PSU banks that are less than 0.1% in the red, so absolutely flat and nothing to worry about here because the recovery is what we've seen on this front as well. But it's through and through the day of Nifty Pharma, Metal, Auto, Realty, Bank, IT, Energy, all of these sectors are doing very well. Shishti, all in all, it looks like a very good day of trade, and some select stocks are also doing very well today. Case in point, Paytm.
Oh, well, indeed, there's been no stopping for Paytm after that stock really passed that 1,000 odd mark. And Snehi, a lot of the sectors or stocks rather from your sectors, be it FSN, other than that, a while back it was Devyani International as well that did come out with its earnings, and it seems like a good set indeed. Apollo Hospitals, one of the other stocks holding strong since the start of the day. Add to that list is Hindalco, BSC, the metal pack overall is seen to be shining bright. So the flavor of the market still remains a lot of sector churning at play right now. But as we are at the flag end of the earnings, it's good to note that select counters between the metal pack, hospital chains, they have actually done very well for themselves. But what do you make of the markets and what your strategy be like? Let's try to decode all of that with a whole host of experts joining us on the show right now. Firstly, let me welcome Narendra Solanki on the show right now. He's joining us from Anand Rathi Shares and Stock Brokers. Hi Narendra, good afternoon and good to be speaking with you. And firstly, your take on the stellar run within the metal pack, because after a while, Narendra, we are seeing that bit of an excitement. Yes, fueled by Hindalco, but the other stocks are not left behind. Was it, what is that you're making of the metal pack? Is it the likely meeting between the two big nations, US and Russia? Is that boding sentimentally well for the metal counters, or the earnings are the sole drivers here?
Yeah, good afternoon. I think it's a mix of both. If you see overall results for the sector, the volume growth has been decent. And of course, the meeting of US President and Russian President over the weekend is definitely sentimentally positive for the global markets, as we might see some kind of a resolution around a long stretch to Ukraine-Russia war, which might definitely provide some kind of a tailwinds to the global growth, which has been lumping around since the war started, and the critical raw material supplies, which has been the disruptions which we have been seeing in a lot of different sectors regarding key raw materials. So I think all of these two, three factors have been really boding well. Plus, the government of India's support to the sector has also been tremendous over the past few quarters, which has been also one of the key factors supporting the sector. And going ahead, we continue to see the domestic improvement in the volume growth happening for the country as the infrastructure spends keeps up the pace. So overall, it's a net positive for the sector right now.
Net positive coming in, and that's reflected in Hindalco too, right? The kind of numbers that Hindalco posted yesterday, the brokerages are very upbeat on this stock, and that positivity continues even after 24 hours of that stock coming out with its earnings. So looking good for the entire metal pack. But also help us understand, okay, before we try and talk about some more sectors, let's just go across to my colleague Ashesha, who's here with an understanding of why Hindalco is up. Of course, earnings were good, but we also have some commentary coming in from brokerage houses, and Ashesha is here to give us a roundup of all of that. Ashesha.
Well, yes, Hindalco's standalone business reported very strong set of numbers. It was better than what the street was working with, and management also came out with its commentary where they expect that the resilience in the Indian economy is likely to aid standalone performance for Hindalco going forward as well. We have Motilal Oswal. They've reiterated their buy stance on the stock with a target price of 790. They say Novelis' outlook for earnings is expected to remain soft in the second quarter as well, but earnings could rebound in the second half of this financial year. They've also said that strong domestic earnings will perhaps manage the impact of soft earnings we could see that could come in from Novelis for the rest of this calendar year. We have JP Morgan. They've maintained their overweight stance. Target price has been lowered marginally to 715 from 720 earlier. Citi maintains a buy. Target price hike to 820 from 800 earlier. Macquarie, meanwhile, has also maintained its outperform stance on the stock, and target price has been maintained at 809 per share. Now remember, we also spoke to the management of the company, and they insisted and they reiterated the fact that second quarter will be as stable as the first quarter, especially for Novelis, but the outlook going forward is likely to be very positive for the second half of the year. Let's in fact go across and listen in to what the management had to say.
We think that the measures that we have put in place, where scrap spreads are improving, a cost optimization program is gathering steam, as well as end market demands are pretty strong. So the guidance that we're giving is that Q2 will be more or less equal to Q1, but the second half of this year you will see meaningful improvement in the Novelis margins and performance. We remain committed towards that $600 per ton EBITDA, and that will largely start to come in once our Bay Minette project gets commissioned, which is starting in Q3, Q4 of next year. But in the short term, you're going to see Q1 and Q2 at similar levels, but the second half of this year, you will start to see meaningful improvement in the margins in Novelis.
Okay, that's the word coming in from the management of Hindalco. We interacted with them earlier in the day, and Ashesha just gave us a roundup of the bullish sentiment coming in from brokerage houses on Hindalco. That stock doing very well, up 5.2%. But Narendra, let's just focus and talk about the pharma space, because good moves is what we've seen here. 1.8% higher in today's trade is the Nifty Pharma, and it's actually names like Alchem. Yesterday, strong numbers is what this company reported. You have Zydus Life, Loris, Dr. Reddy's. In fact, it's not only diagnostics, it's your pure play pharma also that is doing very well in today's trade. Within this entire sector, what are some sub-themes you're liking at the moment?
See, in pharma right now, our main preference is towards hospital segments. So we are more positive and inclined towards hospital segments in comparison with the drug makers. Of course, because of the uncertainty around Trump tariffs and the lot of pricing pressures expected to come up in the developed market as well. Especially a few weeks back, if you see, the Trump has again reiterated that there are a lot of the prices of the medicine are too high and needs to come lower, so that again can trim the margins for the company. So right now our preference is to our hospital segments, which are definitely posting good results, and a lot of capacity expansion has happened, and most of those capacities are starting to come online. And in next few quarters, we are going to see a lot of capacities around the hospital segments coming online, which would further aid in improving the revenue growth for the hospital segment. So we like hospitals more.